All right then, so let's dig a little deep into that pricing problem. As we mentioned earlier, Brent crude prices have come close to $140 a barrel at the start of trading on Monday before falling back under 125. But even at those levels, Brent prices are up by over 60% so far in the year, and Q1 isn't even done yet. Now, the bulk of the rise came after the 24th of February when Russian forces invaded Ukraine. WTI crude has also risen by a similar margin. It went as high as 129.77 a barrel today before falling back. Now, analysts at JP Morgan are forecasting that Brent could rise as high as $185 a barrel by the end of the year. Now, the United States and its allies, as I mentioned, exploring the prospect of imposing an embargo on oil imports from Russia. There's no final decision on that front yet, but the prospect of taking the world's second largest oil producer out of the market without sufficient supply to replace Russia's output has really unnerved markets. Last week, Wednesday, the OPEC Plus grouping decided to stick to the plan to raise output marginally by about 400,000 barrels a day, despite surging prices and a clear need for extra oil supply. And that all happened in a very short 13-minute meeting. So what exactly is going on here? Why is OPEC staying on the sidelines? I explored that some hours ago with Elsie Mbugua. She's a former energy trader at JP Morgan and the founder and managing director at Leadwood Energy.
OPEC, the 23 countries which together, account for nearly 45% of the world's oil production, has been missing in action. So since the invasion in Ukraine, rather than acting as a stabilizing force, the bigger OPEC Plus producer group, has really abstained. And there are a couple of factors to be mindful about. One, the spare capacity held by OPEC in 1990 is significantly smaller today. So back then, Saudi Arabia alone was able to boost output about 3 million barrels a day over 5 months and still have more in reserve. Today, I think they would have a challenge even doing half of that. Then besides the UAE, the other OPEC countries are having a hard time keeping up with their rising output targets. And in fact, we're having some discussions with various traders and saying that production in January for OPEC was almost 1 million barrels off from what they had targeted. And this is using their own numbers. So we're cognizant that there are a lot of factors that are ongoing. We're cognizant that the invasion was launched by one of the group's co-chairs, and keeping Russia in OPEC Plus is important to the other members. I think, Ramah, if you recall, the last time it pulled out, it triggered a production free-for-all that sent prices plummeting, and this was in March of 2020. So there's an understandable reluctance to raise this topic. I think and not just Shell, but even for OPEC, I think the market sentiment is that OPEC's response is a shocking dereliction of duty to regulate the oil market.
Russia at the moment is the second largest crude oil producer on the planet, significant gas supplier to big chunks of Western Europe as well. So, and this is a very hypothetical scenario, but if you're to remove all of that supply from the market, as you pointed out, OPEC Plus members amongst themselves don't have a lot of spare capacity. Is it even possible, at least in the short term, within 2022, to bring in extra supply that would make up for, say, even half of the output we would lose if Russia's off the market?
I think the answer, this is sort of the million-dollar question, but I think what I would say is that it's going to be extremely difficult. And I think when you look at Russia, there are numerous oil and gas pipeline routes, running from Russia to Europe. But I actually think it is the gas pipelines that are the most important. So, just looking at some numbers. So, for example, 25% of Europe's oil and gas comes from Russia. And often the closer you are to Russia, the more dependent you are on Russia crude. And the fewer foreign policy options you see. I think what we're seeing at the moment is that countries that are heavily dependent on Russia oil and gas are a bit slower. In terms of sanctions, they're a bit wishy-washy. Russia also sets the price of what people pay for heating oil in the Baltics. And if it chooses, it can simply just turn off the heating, right? Russia is also the second to the United States as a supplier of natural gas and has always used this to position itself for political power.
On paper, this sounds like an opportunity especially for African oil and gas suppliers, Nigeria, Libya, and so on, to essentially make very aggressive cases now for essentially developing independent supplies to supply those key markets. But it's one thing to have potential, it's another thing entirely to bring these projects to market. What are the key obstacles that these major African oil producers are facing in actually getting that supply into these key markets?
Yeah, no, fantastic question. I think the first with a lot of these big projects is just inherently a lot of the challenges that we see with infrastructure transactions on the continent, moving from one, sort of one government to another, because usually the tenor or how long it takes to do a lot of these projects is quite substantial. The second, I think, more fundamental issue that we are seeing is the issue of funding, right? So, what we've seen is that our African projects are struggling to find adequate funding to commercialize their investments. And this is a discussion that has been ongoing, where the typical funding sources from the West will only touch renewable energy projects or projects that assist in getting to net zero. That will certainly be an issue. In fact, I had a conversation with somebody who's quite close to the Uganda-Tanzania crude oil pipeline, and they confirmed the case that the traditional Western sources of funding have completely dried up, and they had to go to Eastern European banks, I mean, obviously, which they would be affected with this current conflict, or the East. The second, I think, is there's been a bit of policy misalignment between the West and Africa. So gas is essential in the West, right? But it's considered a climate change hazard in Africa. And I know that there's been quite a number of policymakers who've been pushing for fairness. And we saw the European Union in January draft a proposal to ensure that natural gas is viewed as a green energy investment.